Stocks in electric vehicle manufacturers, as well as several major suppliers, have collapsed in recent days. The explanation for this isn't a decline in EV sales or an increase in inflation. The reason for this may be traced back to Tesla, a juggernaut in the electric vehicle business, and its CEO, Elon Musk. The billionaire had some thoughts on the latest quarterly call that put the investors' finances into a black hole. Unfortunately, these losses did not affect solely Tesla stockholders. The losses spread like wildfire to rival businesses as well, and the EV crash has wiped out roughly $400 billion of market value. What exactly did Musk say that resulted in such a significant loss for the investors? And what are the prospects of these reduced companies' valuation for potential future investments? Stay tuned to find out the answers to these questions. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder, subscribing's free, and liking the video will help YouTube suggest similar content. Comments are loved and featured in upcoming videos. 6 months ago, Elon Musk said he'd stop attending investor quarterly calls unless there was something significant that he needed to say. He should really have kept to his original strategy. Following his absence from Tesla's third quarter, the billionaire immediately resurfaced to the call to discuss the company's unprecedented fourth quarter profits and sales. In spite of the company's positive financial performance, his statements on a recent call sent investors into a frothing frenzy. Investors in Tesla and in EV in general saw their worst day in months, falling 11.6% in a single day and dragging down the rival electric vehicle stocks with it. Musk emphasized his remarks on supply chain difficulties that had harmed Tesla significantly less than that of rivals. Still, the billionaire said that it is highly improbable that any new automobiles would hit the market this year. Many had hoped that Musk's commitment of an updated product roadmap would contain positive news regarding the Cybertruck and the semi-truck. Unfortunately, many of the investors were dissatisfied. The $25,000 version of Tesla's mass-market Model 3 was also ruled out as being under development, with more focus put on Tesla's efforts on artificial intelligence and autonomous driving. Despite Musk's claims that the company is already on track to achieve confidently over 50% annual growth in 2022, and also that the semiconductor bottleneck is improved than it was last year, his statements did not support his long-term objectives. Tesla's Cybertruck, the company's first pickup truck, as well as a new roadster and a semi-truck, will all be delayed until at least 2023. He expressed the optimism that Tesla would be ready to put them into production, hopefully next year. When you look back over the past years and see how much it has been delayed, 2023 also seems to be a long shot. That's not something Tesla shareholders expected to hear, particularly at a time when the competition is growing fiercer. EV truck startup Rivian is already producing and marketing its electric pickup, which was just named the Motor Trend Truck of the Year. Ford expects to begin production of the F-150 Lightning EV in the spring and aims to make 80,000 trucks per year to keep up with high demand for the vehicle. In a recent announcement, General Motors said that it will begin manufacturing electric versions of its Silverado and Sierra pickup trucks in 2024. Further caution was issued by Tesla's CFO, Zachary Kirkhorn, who said that rising component prices in the near future might have a negative effect on the firm's market-leading profits. He stated that, "We're also seeing inflation and rising commodity prices, which we expect to continue to put pressure on our costs. How this specifically impacts gross margins is uncertain." The EV juggernaut threw out hundreds of billions of dollars in value in a single day after its fourth quarter results and forecast disappointed investors. Many Wall Street analysts were dissatisfied with Musk's comments. Dan Ives, tech analyst at Wedbush Securities, said that, There was no reason that he needed to double down and shout "supply chain" into a crowded theater. He gave the bears meat on the bones. That's why the stock sold off. I'm convinced if Musk was not on the call, the stock probably would have been up on Thursday. Musk did not actively mention any EV business or startup in his call. Still, all of the pure-play electric vehicle stocks sank precipitously as the quarterly call ended. Rivian stock dropped 10.5%, Lucid stock dropped 14.1%, and Chinese EV manufacturer NIO stock dropped 6.8% in a matter of hours. Ives expressed worry that Musk's words created the possibility that if a company as large as Tesla is experiencing difficulties, the younger upstart competitors may be struggling much more. After closing above $1 trillion in market capitalization late last year, Tesla's stock has dropped 30% this year. In spite of the sell-off that followed the call, the market value of Tesla shares is much more than the combined value of the world's 10 biggest automobile makers. There are many individual analysts who believe that Tesla's high price point makes it vulnerable to a sell-off like the one we just saw, particularly when wider U.S. equities are already in the correction zone. Rather than receiving optimism from Musk, investors instead received his worrying concerns about supply chain and robotics. When compared to Apple CEO Tim Cook, Musk's behavior on the call was a complete 180 turnaround. Like Musk, Cook also had extremely excellent fourth-quarter numbers, and like almost every other manufacturing company on the globe, they also have been hampered by a shortage of resources. However, thanks to Tim Cook's assurances to his investors, Apple's shares rose on the day of the call, while the EV sector suffered a significant decline. Musk may well be a business genius and a tech enthusiast, but he may not be the best person to reassure Tesla's investors. Both bulls and bears agree that the electric vehicle market has made significant strides in recent years. Currently, it is an efficient and lucrative area within the overall automobile industry. Where there is disagreement, though, is how that margin will perform in a competitive market that has risen in recent years. And how much is it worth paying for the EV startup stock? It is okay to own EV stock if you believe in the company's long-term strategy and are mindful of the dangers associated with a very high market value. Some shareholders, on the other hand, may be better off sitting on the sidelines and waiting to see how Tesla fared against the deluge of EV capital commitments from both traditional manufacturers and new entrants. This is most likely not Cathie Wood, a star stock picker who sees the dip as a buying opportunity and took full advantage of a drop in the electric car maker's price after its earning report and invested heavily in the company. She may be considering the long term, given the present market scenario for any EV startup stock provides a very appealing starting opportunity. But I'm interested in hearing your thoughts on Musk's recent remarks. Do you believe that the EV stock market's movement in tandem with Tesla's announcement is a positive development or a negative one? Share your thoughts by writing a comment down below. Whistleblower says that today's price of $27 a share for LCID, it would represent around 50% appreciation of analysts' estimate of $42. That would be an amazing return if we could get there within a year. That should wrap things up for today. Keep in mind that subscribing's still free, and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.